Asian markets, they're trading lower following the overnight tumble that we saw on Wall Street.
For near-term traders, it's basically about risk-reward. The risk-reward did not favor a long trade on Wednesday. The risk-reward does not favor a short trade today.
We are, of course, available to all the NBFCs who would like to have, who have got good quality of ALM and also who have got assets.
The Krangi's gold fetish. We've learned from reliable sources that a large part, or the majority of its income, has come from trading in bullion.
The opening tick is worse than what the pre-opening said.
I think the backdrop is starting to improve. And actually, if you look across emerging markets in the past month, you've probably seen currencies and markets move smartly ahead.
House view is that the oil will be heading somewhere between, let's say, 90 or 100.
The Nifty is down around 1.5%. The Midcap index, in fact, at the low point of the day.
We are reiterating the commentary we gave in the beginning of the year that full year FY19 margins will be better than FY18.
The Nifty is below the 10,300 mark, down about 150 odd points.
Okay, been a rank bad day for the market, and the recoveries are being sold into this one more attempt that the market is making at a recovery, and let's see if that is sustainable or not. For now, 10,300 is what we have on the Nifty. This is Closing Bell. I am Anuj, and with me today is Ekta. Hi, Ekta. Good afternoon.
Hi, Anuj. Well, not a great day to join Closing Bell, but definitely very weak for the markets. And it's the same stocks which are actually plaguing the screen on the downside. Indiabulls Housing Finance, which is down 14%. Yes Bank, which is down around 5.6%. Overall, it's not just them. It's the likes of Reliance also, which has pulled down the markets today.
Yeah. The problem right now is not even the financials. I think today's big problem is Reliance and Infosys. They are the stocks that have actually broken the markets back. And if you take a look at the contribution plate, there's not a single bank in the top 5. Indiabulls Housing and all, doesn't matter. Even despite a 15% fall, it's impacting the Nifty by about 9 points. So that's not the problem. The problem today is Reliance, because if you see today, the bank Nifty has not broken the morning low. The Nifty has, and the Nifty has continuously broken that low. Right now, you're seeing one attempt at recovery, both in Reliance and Nifty as well. 10,150 was that low. That, as of now, is safe. It looks like is safe. But the texture of the market today has been rather weak, especially in the mid caps. I would still want to believe that, given the kind of selling that we've seen for the last couple of days now, you would want to see whether this last bottom of 10,150 is being supported or not. But is this the market's way of just testing that, whether that 10,150 was indeed a strong base or a strong support for the market? Is this a bit of a double bottom formation? I think we'll find out. But today has been weak, and because of stocks like Reliance and Infosys. So that obviously is a bit of a problem point.
But how would you categorize, say, the mid-cap trade today? Because we've recovered from the day's low. It's down 1.6%. Still weak, but not as bad as what we were.
Yeah, and I think there's certain stocks where you're trying to see, we're seeing some buying. Jubilant Foodworks, for example. NIIT Tech on a strong, very weak IT raise, still at the high point of the day. I think Chennai Petro, oil marketing companies, they are recovering. I think this overarching theme still perhaps is crude. If crude has to go down to, say, below 75, my sense is that the Indian market may try to outperform the emerging market pack. Last time also it had happened. As we speak, we're again seeing a bit of an uptick on that. But for now, let's see, if we break 80 convincingly, Ekta, it's going to improve our macro a lot. That, of course, is going to keep us in good stead only perhaps 2 or 3 months down the line. Right now, it's all about what's happening with the universe. And let this whole NBFC mess get out of the way. At some point, you'll stop talking about it completely. Perhaps that would be the time when the market also puts in a bit of a bottom.
Yes, absolutely. Well, in terms of a couple of stocks, it's Ultratech, which is disappointed in terms of numbers as well. So that is a bit of a sentiment negative. And we had some news which was negative for Lupin. They have received around 5 observations for their Pithampur Unit 3. And that's one of the reasons why you're seeing Lupin, which has actually recovered. But nonetheless, it had seen that downtick of around 3% intraday. But nonetheless, let's tell you what we have lined up on the show today. It's a weak day of trade with Reliance, Infosys and HDFC leading losses. Midcaps hurt the most. We discuss market fundamentals with Mr. S.P. Tulsyan, Neeraj Deewan of Quantum Securities, Sudeep Bandopadhyay of IndiTrade Capital. And in these volatile times, which are the sectors to look at and what should you be wary of? We ask our Alpha Manager, Anshul Sehgal, Head and Portfolio Manager at Kotak PMS. And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
In fact, let's start the show with Ashwani and Mitessh for last hour trades. Good afternoon, Ashwani. What's the thought process for last hour now? In fact, as we speak, the Sensex is down about 500 points and the Nifty is trading below 10,300. The Bank Nifty not at the low point, but that also down about 0.5%. Your thoughts for index and individual stocks?
I think last hour you'll see a recovery and maybe some short covering both on Nifty as well as Bank Nifty, because you've fallen straight away from the 200-day moving average almost to previous low. Now around this previous low, the market will try to do some backing and filling and retest. Probably if we are able to hold 10,450, 500 on any sort of rally that happens, that would show you that, okay, 10,150, 200 is probably going to get broken. Or what will happen is you go up and you start crossing 10,500 thereabouts, and then, the view probably will become more bullish. But overall, the speed at which you have come off, it looks very unlikely that, 10,150 is the bottom. Although, for the last hour, I think you'll see a fairly strong short covering, particularly on housing finance, because I think probably everybody in the world is now short on those three companies. So my sense is once that tends to happen, the recoveries are also fairly sharp. So talking about India Bulls, Deewan Housing and Repco Home. So overall, cover your shorts, and if you are adventurous, probably get long on Nifty, Bank Nifty for the last hour. Having said that, HPCL is a buy with a stop of 209, target of 224. RBL is a sell with a stop of 520, target of 485, and TVS is a sell with a stop of 506, target of 488.
Okay. Mitessh, what would you be recommending both on the index as well as stocks right now?
Yeah. So I think on the index, we were looking at 10,300, 260 to act as some kind of support. We've kind of just held down to 10,250. But yeah, I think the structure is quite negative. So eventually, I think we'll break that and possibly head towards 10,100 to about 10,000 zones. I think those lower levels would be tested, and the support of 10,200, 150 will break. The only thing is that because we have fallen too much in the last 2 days, maybe around these levels you might take a couple of days of breather. But trading should be more biased towards short side. I in fact have 2 sell calls on the stock side as well. Bajaj Auto is a sell with a stop at 25.25 for targets of 2,400, and Cadillac is a sell with a stop at 377 and look for targets of 360.
Okay, those are some trading ideas. By the way, just pull out the intraday chart on Ultratech Cement, and that stock is now making quite a bit of recovery. In fact, just look at that stock right now, 2.5% higher. Sorry, lower. It was down about 5% at one point. SP Tulsyan of sptulsyan.com and Neeraj Deewan at Quantum Securities, both with us. Good afternoon, Mr. Tulsyan. Your thoughts first on Ultratech Cement. Prima facie, looking at those numbers, the stock hit a 52-week low today. But how would you approach the stock now?
Anuj, if I want to look the negatives, then definitely negatives can all be seen by saying that the cost pressure is there, margin pressure is there, where the EBITDA fell from 423 crore to 376 crore. But the silver lining, which I will at least look into, is the 21% volume growth to 15.7 million ton against 13.1 million ton, and the JP Associates, assets having acquired now operating closer to about 75%. It is futile. I don't understand these all estimates numbers, for ACC and Ultratech, that the Q2 is seen to be the worst quarter for cement industry because of the seasonality. And secondly, crude having risen, obviously you will be seeing the pressure on the freights and the power and fuel cost for any. That's a logical conclusion, and to expect such a rosy expectations, from on the profitability front is not digestible. But anyway, now if I just take a call going forward, in fact, if you see the cement manufacturer, and that is the forward-looking statement one we should really look into, that everyone is giving a consensus growth, cement growth of about 9 to 10%. For Ultratech, there is no point in taking a regional presence call because they have the pan-India presence. Eventually, will be having a capacity of 111 million ton once they acquire the Century Textile Cement plants also, which is being acquired at an EV of closer to about 94, 95. So I'm taking a forward view. As I said, that if I want to look for the only confine myself to Q2 numbers, I will say that yes, results are disappointing. You have seen pain on the power and fuel cost and mainly on the freight cost. But the silver lining is 21% volume growth, and the kind of the volume power and the pricing power are seen coming. I think will be coming in the next 3 quarters. You don't have any kind of headwinds for next 3 quarters for any cement stocks. And we have been, in fact, I have been saying this for last 1 week, that allow these results to come out for Q2, allow them to settle, and in fact, taking that into account, ACC and Ultratech both qualifies as a buy by us because of the clarity seen for the cement growth, which is estimated at 10%. And if the crude also remains lower and rules at the same level, that will be seeing the margin pressure also eased out, in the longer term or maybe in the next 3 quarters. So yes, only looking to Q2 numbers, it's disappointing, but the volume growth is really seen quite exciting of 21%, which we have seen in case of Ultratech.
Okay, so that's on Ultratech Cement. Neeraj, the IT stocks are weak today. There's a possible shake-up which will possibly take place in the H-1B visas. What's your sense in terms of how detrimental it could be, or would you be a buyer on dips?
Yeah, good afternoon. I think definitely it will have a major impact for a country like India. And, we've seen even TCS results coming out, and we saw Mindtree. In spite of the last quarter looking to be a very good quarter, the results were not spectacular. So they were fine. They were not bad, but they were not spectacular. So even after the kind of rupee depreciation and the kind of growth in US that is coming, still we didn't see the numbers coming out to that kind of a level. So I think IT, we've seen a good run-up also happening in IT stock. I would wait. So though I would be buyer in stocks like large cap names like TCS and in mid-caps, something like NIT Technologies in the smaller one. But I think one need to wait and see where they settle down, because this correction is coming after a good rise also that we saw in most of these stocks.
Okay, well, the stock of the moment really is NIT Tech. That's now up about 5.5%. Now, keep in mind, this is after the kind of run that we have seen, and on a day when the entire IT pack is down. So, NIT Tech obviously stands out in terms of the kind of gains that you've seen on this one post the numbers. So, looking quite good over there. In terms of other stocks where you've seen some action, Mr. Tulsyan, thoughts on Piramal Enterprises? That's one stock which used to get a lot of people excited, but and it was sort of insulated from the last round of fall in the NBFC stocks. But today it's been the chosen one for punishment.
Anuj, I think it's a victim of both NBFC and housing finance company. And if you are taking so much worry and so much fragile sentiments being built on the housing finance companies having exposure of 10%, 15% to the developers and or to the builders, one cannot really understand and assess that what kind of exposure Piramal Enterprise is having to the builders, because they don't have the significant presence in the home buyers, in their total lending arm. So that is seen to be quite risky, because the kind of beating which we have seen in case of India Bull Housing in this last 2 days on the fear of the Supertech Group exposure of about 1700 crore, of which the clarifications having come in that it is not more than 400-500 crore, and that too backed by the annuity rental income assets and the other individual properties. So I think that the fear of the exposure to the builders in PEL or maybe in Piramal Enterprises seem to be bothering, and as such, Piramal Enterprise seem to be a high beta stocks where it swiftly corrects. Maybe once some kind of renewed buying comes in, or maybe the clarification or some kind of sanity returns, you will see the stock bouncing back quickly as well. But as of now, the sentiments are seen bad for the NBFCs and housing finance company, and Piramal is seen to be victim of both.
Mr. Tulsyan, we have HDFC Bank which comes out with numbers tomorrow as well. What's your expectation there?
See, Ekta, we don't take the we don't preview the results, but I don't think that there will be any kind of disappointment after having seen the numbers having come in from the banks like IndusInd Bank and all sort of things, and maybe even the smaller ones, Federal Bank and all that. I think in case of HDFC Bank, it is only the matter of growth, whether they will be able to post the growth of 20 to 23%, because market is only focusing on the growth, but having corrected so much. And more especially on Wednesday, in last 30 minutes where it fell like 9 pence, just to maybe to give the weekly option expiry management. I think the advantage goes in favor of HDFC Bank now ruling at a lower end of the range. And I don't think that it should really be seeing any kind of weakness post results, to be seen on Monday. And as such, market having corrected so much on the financials also, I think maybe hopefully, because generally if you have a positive view on the next series, which we are, the rollovers on Monday and Tuesday will be happening on the long side and shorts will not get rolled over. So probably you have that hopes alive that yes, things should have some kind of mild recovery. I'm not taking a bullish call because the expiry has to happen on a weak note if a series has started with a weak note. So maybe Monday, Tuesday also should see some sanity for the financials, which should also be helping HDFC Bank in taking a call. But it all depends on the growth which will be posted by HDFC Bank tomorrow.
Okay, all right. So the expectations are that loan growth should continue for HDFC Bank with an NII growth in double digits also. So let's see whether that comes through or not. Net interest margin recovery will be closely watched. We'll take a break now, but more on the markets on the other side. Stay tuned. Welcome back. Well, still looking tough in terms of the screen for the markets. So the Midcap index is down around 321 odd points. The advanced decline ratio is weak. So it's around one stock declining to around almost three stocks, one stock advancing to almost three stocks declining on the Bombay Stock Exchange. There are a couple of stocks which are managing to buck the trend. So Jubilant Foodworks, for example, is above its 200-day moving average. And we have something like Biocon also, which is not doing too badly. So up around 2.8% for Biocon as well. Mr. Tulsyan, there was a CNBC TV18 exclusive about Shrey, and, redundancies have taken place in the company, and you can see the reaction on the stock. It's recovered from the day's low, but it's still weak, down 10%. What's your sense in terms of Shrey, and how would you approach it?
See, Ekta, I think from perception point of view and maybe from fundamental, in spite of good numbers having seen from the company for Q1, SREI, Shrey Infra, seem to be the weakest in all the NBFCs and all sort of things. And because of the more presence in the infra financing and the news flows, market is not able to take any negatives. And all the negatives are seen, taken with, or maybe blown out of proportion, or maybe taken with extreme shock and pessimism, which we see. I'm not saying that those things are not correct, or it will definitely be turned out to be true. But in spite of that, the fundamentals are, because market is the way it has been behaving for last 2-3 weeks is quite fragile. And if you have this type of fragile sentiments, that is reflected more into the stock price of any company, which we have been seen happening with NBFCs and HFCs. So as I said, that this is the weakest in the lot of the NBFCs, maybe from management perception or maybe from fundamental. Obviously, I won't be surprised to see this type of weight being seen for the share price.
Okay, that's of course Shrey Infra. By the way, that pullback that we were seeing at 230 is also being sold into now. And Indiabulls Housing now is down 17%. Just pull out that stock intraday right now. 17% lower is what you have on Indiabulls Housing. Neeraj, so in this whole NBFC pack, is there anything that you would want to pick right now, or just avoid the sector as a whole?
No, actually, we've seen good selling happening in the whole sector, and now housing finance companies are seeing this kind of sell-off. But I think in the whole lot, there'll be good time to pick some of the stronger NBFCs if one is an investor, and even at the current prices, one should start buying. So even in the pure NBFC space, something which have a good parentage, so those kind of companies like L&T Finance, or even in the housing finance companies also, there are a little more conservative companies which didn't have those kind of exposures to builders even when the best of the growth was coming their way. So there'll be stocks like a Canfin Homes, there'll be stocks like a GSE Housing Finance. So one needs to pick up, the kind of companies where going ahead, the quality of the company is good, the parentage is good, they belong to a good group. So for them, getting capital, even going forward, will not be that kind of a challenge, which for some of the smaller NBFCs will be there. And a lot of housing finance companies which have mushroomed and which grew very fast, they will definitely face a problem. But among the whole lot, I will not really totally write it off and not say that I'm not looking at NBFCs and housing finance companies at all. But I think in the carnage, you will get some good companies also which can be bought with a longer term perspective.
Mr. Tulsyan, Jubilant Food comes out with numbers next week. Stock is outperformed. What would your approach be, and what's your expectation also?
Ekta, which stock you have referred to?
Jubilant Foodworks.
See, again, coming on the same theory that yes, I don't think that there will be any kind of disappointment to be seen on that front also. But the problem is that can these high price shares really sustain, where you see the P multiple of 40, 45, and I have always been, averse to taking a call on these FMCG where they are just the distribution agent. They don't have their own brands, whether you talk of Page Industries or Jubilant Food. I'm not, again, as I've said that we don't preview the results, but if you really take a call, even if the results are seen to be quite satisfactory, whether they can really sustain. One cannot loosely combine these companies with the FMCGs like Nestle, Hindustan Unilever, or Britannia, or Godrej Consumer, or maybe Asian Paints, because market when go gung-ho, they start taking valuation call, with a P multiple of 50 to 70, 80, 85, which you have seen happening in case of Page Industries and Jubilant Food. So I've always been, cautious on these two stocks in the FMCG space, when taking a call. So again, in spite of the good results, whether the prices will sustain is a question mark, whether the renewed buying will come is a question mark. We are keeping the neutral stance on the Jubilant Food going ahead.
All right, Mr. Tulsyan, we thank you on that note. Thanks a lot for joining us. Have a good weekend. We'll talk to you on Monday. We'll do one thing. We'll take a break and be back with the BTST calls. Buy today, sell tomorrow from our technical experts. It can be STBT as well, of course.